This lesson will be about precondition because it is one of the most important topic when we trade key levels, because once more key level it's not enough in your trading. Also far more important to have good precondition. That's why what we will do right now, we will discuss all precondition about of breakout, if price will break out here. And also we will discuss precondition of false breakout or bounce. First we will discuss false breakout or bounce, because I like to trade false breakout, is more close to me, and also about breakout. First, it is the price moved a lot without good pullback. What does it mean, good pullback? For example, like on Forex, price drop 400 pips, 500 pips. As more, it better. And when we have powerful level from left side, with huge possibility, first reaction on that level will be pullback or bounce. For us, we don't need, for example, like a trend change. For us, it will be enough if price will bounce 100, 200 pips, because nearly powerful level, we will be able to open entry with low and predictable risk. How does it look on a chart? Example for you here. I wait for this entry, and I don't know will it happen. We can open this chart, and you will see the price today already dropped down 111 pips. ATR is 67 pips, and you can see on these huge candles. This candle is 2 ATR, 2 ATR, and 2 ATR candle. And here we have this powerful level. It is a low of September 2011. That means from this place, price dropped down without powerful pullback. And how many pips here? It is 300 pips. It's huge amount of pips. That's why what can happen here? With huge possibility, price will bounce from this level. First reaction will be bounce, and for us it's enough. Example here, like on this key level, even if the price will bounce 70 pips, it's enough, because nearly such level we can open entry with really low risk, like 10 pips, something like that. Another example for you here, when I trade New Zealand USD. And friends, take a look here. Price, what happened? From this area, price dropped down 500 pips, and there was only here was a pullback, but it wasn't a powerful pullback. Price even didn't do a re-high. And first reaction on this level was a powerful bounce. And what happened here? You also can take a look on this candle, and this candle, it was a 2 ATR, and it also was awesome, and white plus ATR. And today average daily move 62 pips, and price already rose up 85 pips. That's why there is no buy entry today. That's why we should count ATR and how many pips price drop. The next reason, price approach to key level with big candles more than 1 ATR as more as best. Yes, example here, the same example like I told. Take a look on this last candle, on this one. Before that, the price average daily move was like 51 pips, 31 pips, 47, 55, 53. That means nearly 50 pips per day was average daily move. And in this candle, price dropped 128 pips. And how much is it? If we will 128 delete on 50, it means that price dropped down 256% of average daily move per one day, per one candle. In that cases, it's really huge possibility of a pullback, especially on a fixed market. And what happened here? Take a look, false breakout, and price after that rose up. That's all. Just imagine, nearly level, you open entry with risk was 10 pips, friends. Risk was 10 pips. Oh my god. The same here, Swiss franc. So sad that price didn't come to this key level, but take a look here. It is nearly 120 pips, and average daily move is 67 pips. That means it is nearly 2 ATR in one candle. Okay. Price is approaching to key level very fast on lower time frame on M30. This when price can drop or rise a whole ATR in 1 hour candle. It is also powerful picture. That means that someone did it. Example for you here. Take a look. This 4-hour candle. In 1 4-hour candle, price dropped 200 pips, 250 pips here in this candle. And price came to low of previous day, and first reaction was a bounce. That's the power of ATR. Day candle opened with a distance more than 0.5 ATR before the key level as big as now. What you need to understand, when price approach to some key level, and it's important to see where price had opened, because just imagine here, the price were open to ATR from key level, and after that when price dropped it, price made false breakouts. That means we got a good entry. But just imagine if price close open nearly this key level. nearly key level here. And for big players, it's so easy to break down this key level when price close. The next one, further retest bigger period of time, more than 1 month, or huge distance like 500 pips. What about further retest? You need to understand, as big a distance between this retest and this previous time when price was here, it is better, especially when we trade false breakout or bounce. It's not about like when we trade a mirror level, because mirror level it's mostly for continue of a trend. That's why it's a little bit different. This distance, it's good when we have as big as distance between these two key levels as it possible. It's good to have, it's good to open entries if the distance between these levels more than 1 month on a fixed market. Example for you here, like take a look here, this key level, and first reaction on that level, take a look here. First reaction on this level was 75 pips bounce, and just imagine risk was 5 pips, or even if you open with 10 pips, if you open entry according to false breakout rules, your risk will be nearly 10 pips. Okay, 10 pips. That means you could take 1 to 10. That's all. Distribution picture on higher time frame. What does it mean, distribution picture on higher time frame? When we see that volatility increased and price approached to some key level of huge candles, what is distribution on higher time frame? Here it was accumulation when price were in a range so many days, or here the price was in a range so many days, and after that you can see that ATR of every candle increased. That calls distribution. And when price hits such a key level, in that case, if price hit key level after such huge candles, with huge possibilities, there will be bounce. There will be a bounce. Example for you, my friends. Example for you, British pound, Australian. Take a look here. Example for you. We have accumulation, we have slow uprise, we have accumulation, and this candle, it is nearly 2 ATR, and this candle, it's nearly 2 ATR. It's called as distribution picture on higher time frame. And we can open weekly chart, and you will see the price bounced from this key level. Price bounced here. Take a look how price bounced here. 500 pips drop. That's what I call accuracy. Okay, what is the next one? External background is in a different range of price rise, but not news. Okay, about external background is different. It's like it's like a Brexit. Just imagine when Brexit started, and there was a lot of pressure on British pound, and what the price had done when Brexit started. Take a look here. Brexit started 2015, and what after that? Price just dropped dramatically in that day. That means, what does it mean? When we have such powerful news, it's not wise to, better to find entries with that news. When we have such powerful news like Brexit, such powerful news, and still entry will be only nearly powerful level with low predictable risk. Only in that case there will be good entry. Extremes, all-time high, low, with huge possibility when price will approach first time to all-time high or all-time low, there will be a bounce. Example for you here on indexes, example was German index. Take a look here. First reaction on this key level was, take a look, from this place, price dropped dramatically. Better to watch it here. It's powerful level. Friends, what you need to understand, this precondition, it's not like 100% law and price will do only that. It's only a precondition. If there will be a lot of them, your probability of your entry will rise. That's all. Global trend direction. Also, it's important to see where you have global trend, because best entries always will be to continue a global trend, because if global trend started, that means big players accumulated volume, accumulated a position, and that's all. That's why for you it will be far better and far easier to open a position to get your profit. That's all, friends. And take a look here. Yes, price already bounced 30 pips from that area. That's all. Once more, about global trend direction, friends, example for you. When we have powerful global trend, and after that there will be some entry, and just imagine we have something like this mirror level. This entry will be good because we have global trend up, we have local trend up. That's all. That's why it's important to ask yourself what is a global trend, because with bigger possibility global trend will continue. Friends, about precondition of breakout, I will record additional video. I think it's enough for you in this lesson. What you need to do, you need to write down on list of paper all your precondition like I did it here, and after that when you will open every position, you need to ask yourself what precondition will prove that the price will move into my favor. That's all. If there will be no any precondition, it's not wise to open a position. And also if there will be a lot of precondition that the price will move against you, it's also wise to skip that entry. Thank you for your time. Talk to you soon. Bye.